Hey everyone, it's Flexing Joe, and I'm back to review another day in the markets. So today, let's go over Friday, November 22nd, and we'll start with NQ. After the prior day's massive drop here and rally all the way back to where we started, you can see that after the close in the overnight session, we really just chopped around here. We moved down lower. We held this older zone that I had drawn, and then we sort of got bought out of that, went over VWAP, and then sustained price over VWAP. So this was looking strong for the buyers as they looked like they were just accumulating here on VWAP, and right off of the open, I would have been expecting a push. Note that candle by candle was long all the way from 5:30 in the morning, so over 4 hours of candle by candle being long. But as long as that was time-wise, that only moved up, at its peak about 100 points. So candle by candle is long on NQ going into the open. On VIX, you can see in the overnight session we pushed up, and we, for those people who look at like fair value gaps, we filled this one, right? If that's your thing, you can just see also that we just rejected like either, wherever you want to draw the pivot, it's like right there. So there's a lot of, reason why we would see resistance here. It's also $17.50. So the half dollars tend to matter, especially under $20. So pushes up, comes back down, fails to break another high, comes down, flips short, flips a little bit long right here at 8:30, right after we break the session low. This was the session's low. Doesn't go anywhere, and eventually it flips back short, and we're short candle by candle on the VIX to the open with a nice downtrend under the 10-minute 200. 34.50 cloud is flip bearish as well. So we're in a nice little downtrend, and this should be good for the market. Lastly, ES was very close to the same thing. You can see where we closed here, little overnight chop, moves down, bounces basically off of the same belly button level here. And notice how these buyers held up, and this is what I talked about in the prior day's video. You see we just swoop under there, and we just clear out the stops that are, or whatever liquidity that you might find under there, and we push back up. Candle by candle flip long, or it flipped long here at 5:30 back to short, but long again at 6:40, and it was long all the way through. It bases here on VWAP and within the 10-minute EMAs. So candle by candle is long on ES as well going into the open. So if we look at all three, and we'll zoom in to make it easier, with the long candle by candle, VIX in a nice smooth subtle downtrend, and being long candle by candle on ES, right, with the prior day's high being right here, right, and let me just make sure I have, would be this level right here. So that's NQ's prior day's high. ES makes this push up, breaks the session high. That's of course a profit taking trigger, and then it pushes up even more, and it breaks over the previous day's high. So you obviously see some clear profit taking over the prior day's high, but it does close above it. The next candle really has a long wick, fails to close back above it, and then I believe there was a 10 a.m. news. Michigan consumer sentiment, I believe, University of Michigan, and they really dropped it hard from there. So you get a big drop following the news candle. Surprisingly, VIX did not flip back long. So at 10:10, you have the bases loaded confluence there, where VIX is long and ES and NQ are candle by candle short. So you would have had a really nice pullback. Of course, this would have been deep and maybe a bit too unexpected of a pullback here on NQ. But you can see there is a lot of reasons to go short here. You have the opening print that was lost. You have VWAP. You also have the 10-minute 9 and 20 EMAs that are pinching right there. So that was at least a decent short and worthwhile to try. VIX makes a FOBO over its, a fake out breakout over its, not only just its 10-minute 20 EMA, but also its orb high, its high of day. So, and there's this gap right here, and it just rejects out of this gap as well, and it makes a decisive move back down, and the market starts to just do this like sideways action thing for the remainder of the day. Inherently the market is bullish. When we're in a range, I sometimes think that it's important to remember that, especially if we're bullish on the higher time frames. So if we look at, and I'm just going to put an arrow here so I remember exactly what we're looking at. If we look at the 4-hour chart, this is us right here. So you see we are bullish, right? We had a doji here at the 4 hour, they couldn't move it lower. Then you had another candle closing right here above the 9 and 20. So the 4 hour, 9 and 20 EMAs are bullish, right? If we look at like the 1 hour, why are we all the way like in April? Oh, because this is a day. Durr. I'm not editing that out. That's too funny, actually. So if you look at the 1 hour chart, same thing. Pushed up, and these candles are closing back above the EMAs. So the wicks do the damage, bodies tell the story. Look, you see how they came back down into this pivot area as well. 30-minute chart, of course, you know, very much. There's 30-minute chart, very much like a barcode. And really only it's like every other candle closes below, closes back above, below, back above, and then you get this little kind of squeeze move into the close there, but really nothing to write home about. Trading in a range can be difficult for most traders, and using the candle by candle strategy and the basis loaded indicator really has a lot to do with, you know, trend, momentum, and also reversal. But when you're in a range going back and forth, you need to also just remember the market structure and just really taking an extra look at how things are setting up for the next move, right? So after the short, right, you had this huge flip back long when the VIX rejects, right? The next candle, if you took it on the pullback, it did give you a solid trade going from 807 to a high of 851. So you would have been able to get from 805. So you would have been able to get about probably 30 points depending on your entry in here. So that was pretty solid. Yes. 82. It would have been about 6 to 8 points depending on how good your entry was. Then you get a candle by candle flip short. If you had your 2-minute EMAs, I mean, you have the prior day's close, you have the belly button right here. It's another flip short. Then you see that they failed to push it lower. So the market structure is setting up for you a higher low here. So here's the two things about a higher low. First, if this is the higher low, then that makes this a weak high. How do I know this is a weak high? Because it failed to produce a lower low. So when I'm here and I'm seeing that this is a higher low setup, my target should be the most recent lower high pivot area. So you see, and especially I like to scale in the upper 10% of the candle. So we would be looking for probably around here. So you see this almost touches it, depending on how aggressive it was. I might trim there. You could trim there, but you see how it almost breaks over that wick. The sellers still step in. This is why I scale before a key pivot break and not after. I like to make sure I'm locking in profit because this is a 40-something move pullback, 40-something point pullback on this move. Wow. Anyways. And then you get another candle by candle flip back long here. You broke over that pivot and it looks like they're trying to go for high of day. You get high of day rejection here, and look how it trails back down. So really, really choppy. ES high of day break here as well. So in the same candle, they both had what looked like a fake out breakout. And then this was at the same time we get a VIX candle by candle flip. So depending on how aggressive you want it to be, you could be short here in the high of this candle, risking the high of day, because you know you have VIX that's flipped back long, and you know you have a potential for a fake out breakout because of how much it rejected after the high broke, right? So breaks high of day, rejects that much, right? That's from 880 to the close is about 20-point rejection. And 20 points doesn't maybe seem like a lot, but considering the range from the low to the high, 20 points is, you know, about 12% of the range, right? 1/8, where the range was about 160. So you could have done that. That's a, you know, a somewhat aggressive trade, but you know, depending on how well you hold it, you do get VWAP out of it. So it does give you about 70-ish points. But VWAP holds though multiple times. When you see this buying here under VWAP, it's a very simple trade with easy risk, right? Candle wicks down and closes under 95, you're out. Any entries right here, that's only 10-point risk. You know, maybe you give it 15 to 20. If you want, you know, even if you got in the same spot, if you just wanted to see what was going to happen when we got down to the opening print. But these were decent long trades. Again, it's against the candle by candle on here on NQ and on VIX and on ES. But again, have to remember the structure, and certain things are going to be more important, and this is one of them. So hopefully you find this video helpful, and I will see you all in the next one.